We're back at it again with another video in the sim-to-funded prop trading series. Now, for those of you who don't know what sim-to-funded prop trading is, well, I absolutely love it. In my humble opinion, it is the perfect in-between of trading on a paper account where you have no risk, no reward, but you're working out the mechanics of what trading is, to your own fully funded account where you're taking on full risk and full reward. Like I said, I believe it's that perfect in-between. It's the perfect transition where you have a little bit of risk, but also if you do well, you could also get a little bit of reward. And really, as you can see from some people, they actually get a lot of reward. Now, if you want more of a detailed breakdown of what sim-to-funded prop trading is, I have a whole standalone video. Make sure to check it out. It's in the description below. And now for those of you who are already up to date on what sim-to-funded prop trading is, you're probably already well aware of the fact that it's taking the retail trading world by storm, and for good reason. The pitch sounds amazing. For minimal risk, you can make a lot of money, and that sounds amazing in the world of trading. But of course, when you dive into it, a lot of the times when you have things this popular and complicated, there's a lot of questions, and that's exactly what this series is for. As you can see in this playlist or catalog or whatever it is, there's a lot of things to talk about. How to pass the evals, what the rules mean, what they don't mean, and I even share my own journey. Over the past roughly year, I've gotten multiple six figures of payouts, but before that, I had a really rough journey, as in just shelling out money on my credit card, trying to pass the test, going to fund it, and just not having a good time. And then all of a sudden, when I treated this like a scientist, like when I attacked it in a very data-driven empirical approach, that's finally when I had success, which brings us to one of the key questions that I want to cover in this exact video. I want to chit chat about how to pass a TPT, a take profit trader evaluation. I've made a previous video of how to pass an Apex evaluation. You guys loved it, so I want to do it for TPT, take profit trader, because it's actually wildly different. And just from the onset, I want to let you know that it's more difficult to pass a take profit trader evaluation relative to Apex, but the trade-off is this, is as soon as you have a funded account, it's actually easier to get real legitimate payouts. So once again, with higher risk and reward, and it's a whole paradigm that you have to consider the entire journey, not just one part of it. So in this video, I want to take a math-driven approach. I want to give you the real stats of the situation of how to optimally pass a take profit trader evaluation. Before we get into all the good stuff, I should let you know that for the theoretical examples in this video, I'm going to be assuming that you're using a 50K account. Granted, there are other accounts, but the 50K is by far the most popular. And I should also let you know that I'm going to be basing the numbers off of trading one contract. But of course, if you're trading more, you can scale it up, or if you're trading micros, you could scale it down. But obviously, I just want to let you know the base math for this particular video. And with that being said, let's rock. Step one, what is the actual test? What do you actually have to do to pass the evaluation? Well, TPT, Take Profit Trader, is not really different from any of the other sim-to-funded firms where you have to hit a certain profit target without having a certain unrealized drawdown. As you can see on the screen here, the TPT 50K account, to pass the test, you have to hit a $3,000 profit target without suffering a $2,000 unrealized drawdown. For the longest time, they did have a daily loss limit rule, and if you ask me, I am very happy they got rid of it. In fact, I don't really engage with any prop firms that have a daily loss limit, a DLL, because in my humble opinion, they are extremely predatory, but like I said, that's my own opinion, and I choose to stay away from them. Now, when you compare this to the Apex test, it's really not that different. On Apex for the 50K account, at least at the point that I'm filming this video, you have to hit a 3K profit, but instead of a 2K drawdown, it's actually 2.5K, so you have a little bit more wiggle room. And I should also point out that on Apex, you could actually trade 10 contracts, while on TPT, you could only trade 6. In reality, those are just small nuanced differences. The real major difference is here. On Take Profit Trader, they do have a consistency rule to pass the eval that does not exist on Apex. Be consistent. Trade for a minimum of 5 days. Your most profitable day cannot be more than 50% of your total profits. This is wildly different than Apex. In recent history, on Apex, you can pass the test within 1 day, and there's no consistency rule because that would not make sense if you could pass in 1 day. How could there be consistency rule? But on TPT, on Take Profit Trader, this is the major difference. To pass the evaluation, you have to trade at minimum of 5 different days, and at most, one of those days can only be $1,500 because of the 50% rule. Your max profit is $3,000, meaning 50% of that, $1,500. Well, that's the max ceiling on any individual day. If you end up exceeding that, as in going more than 50%, that means you're going to need a higher total profit, as in whatever your highest profit is above 1,500, you have to double that number up, and that's your new profit target just to pass the eval. Now you're probably sitting there thinking to yourself, why in the world would I ever use Take Profit Trader? And hey man, I get it. On the surface level, the evaluation does seem more difficult, and in reality, it is more difficult, but there's a trade-off. And this is what I alluded to earlier in the video, is by the time you pass the eval and actually go to a funded account, well, there's no more rules such as you have to trade 8 days or something like that. As soon as you start trading well on a funded account and Take Profit Trader, you can actually take out money every single day. So it's one of those things. Do you want to front load your difficulty, or do you want it to be in the back half? And that's the trade-off between Apex and TPT. TPT is more difficult to get started with, but when you get going, you are good to go. On Apex, it's easier to get started with, and then it's more difficult to get payouts. So in the end, I do like them both. I want to be honest, I do trade with them both. It's more of a personal preference of where do you want the difficulty in the process. And now that we're all on the same page of what this test is, what this test isn't, and really how it compares to its largest competitor, let's get into the exact math. Let's get into the exact statistics of how to optimally pass the Take Profit Trader evaluation. So the basics of the test are pretty easy to understand. You have to hit $3,000 of profit without suffering a $2,000 unrealized drawdown. The tricky part is, what does it mean with this consistency rule? Your most profitable day cannot be more than 50% of your total profits. We're going for 3K, which means your most profitable day cannot be more than 1.5K. So let's start in that case. What you could do in 5 trading days is make 1,500, 1,500, congrats, you're at 3,000, and now all you have to do is trade an extra 3 days to hit the other goal of trading at least 5 days. So it looks something like plus 1,500, plus 1,500, and then nothing, but you still technically have to execute a trade. Now let's think about that. How feasible is it really to make $1,500? Well, if you're trading an NQ contract, which is obviously massively popular, that's 75 points, which if you need a QQQ, if you need a NASDAQ equivalent, that's about just below a $2 move. Now, if you're trading on the S&P 500 futures contract, the old ES contract, to make 1,500, you would need 30 points, which is roughly equivalent to about $3 in the SPY. Now, those aren't exactly monster moves, but they're definitely not small moves either. And when you look at the nominal value, the 1,500 that you're going for, and your drawdown of 2K, that's almost 1-to-1. So we could call it about a 50-50 shot. And the fact that you have to do 2 days in a row, well, 50% multiplied by 50%, if you just kind of do this out of the gate, you're looking at a 25% chance. That's a half of a half. So yeah, if you do this in a series, you're going to be lucky, I guess, 1 in every 4 times. But overall, the odds aren't necessarily the best. So instead of rushing it, doing it in the fastest time possible, let's see what happens if we stretch it out. We already know that we have to trade for 5 days. So what if we trade all 5 days equally, i.e. going for $600? 600 times 5, that's where I'm getting the 3,000 total. Well, in this scenario, it's a lot more manageable. If you're trading NQ, that's only going to be 30 points, which is just below a dollar movement in QQQ. And if you're trading the ES contract, well, that's only going to be 12 points, which is just over a dollar. So still not the smallest moves ever, but definitely a lot more manageable. The downside to this particular option is instead of trading for 2 days, you now have to trade for 5 days. But with that downside, there's also an upside. If you're going for 1,500 per day, pretty much as soon as you take one loss, it's game over. In this situation, if you happen to take a loss, you're actually still kind of fine because it's only $600 if you're doing a 1-to-1 risk reward. And of course, I'm just giving theoretical examples. You can skew this however you like. But my point is, on a $600 gain or loss, well, all of a sudden you now have a little bit more wiggle room. So we've broken down what it looks like with the fastest option of 1,500. We've gone with the slower option of 600, where it's perfectly those 5 days. What happens if we're somewhere in the middle? What is that Goldilocks-like situation? Let's say we're going for 1,000. That would look like 3 different $1,000 gains. That's your 3,000 total net profits. And then you would have 2 random type of scratch days. Well, coming back to our NQ example, to get that $1,000, that's about 50 points, which the QQQ equivalent would be just over $1. And then if you're trading for the SPY, going for that 1,000, you need 20 points, which is going to be roughly $2 in the SPY movement, just to give you an idea, because I know the ETFs were all a lot more familiar with those guys. So basically, it's not as extreme of a movement as the fastest option, but it's also a little bit more than the slowest option. But then again, the trade-off there is instead of having to trade for 5 days, you now only have to trade for 3 days. Like I said, it's somewhere nicely in the middle. And with respect to risk to reward, it's the same thing right in the middle. Unlike the fastest option where you can only take one hit and you're done, or the slowest option where you could take multiple hits and we'll see how it pans out from there. In this one, you pretty much are allowed a leeway for one loss. So like I said, it's somewhere in the middle. So to quickly recap, we've covered everything from the fastest to the slowest when you're still optimizing on time. But remember, when it comes to the world of trading, sometimes it pays to think outside the box. And I'm just saying, what if we didn't put ourselves in the box of having to trade for 5 days? What if we really didn't care about that rule as in efficient with time and we actually went for a little bit longer? What if instead of 5 days of trading, we were fine with trading for 10 days, as in we're fine with only getting $300 of profit? Now I get it, you have to trade for 10 days, so we're doubling up on time, but think about how much easier that is. If you're only going for $300 on NQ, that is only 15 points. That's not even 50 cents in the Qs. And if you're trading ES, aka the S&P 500, to go for $300, you only have to go for 6 points, which in the SPY is just over 50 cents. My point is this: when it comes to the markets, there's always going to be a trade-off. If you want to go really fast, well, your accuracy is going to drop because you have to go for bigger swings. But if you go slower, which I'm not saying is the best thing, but that is another option, you only have to go for small little bunts. And really, it's going to come down to you, your personality, and your risk tolerance, and more specifically, your trading strategy. And to really tie this video together, I feel like it's that last part, the trading strategies, that we really haven't talked about. Of course, we're talking about the risk, reward, and the money you're going for, but I think it should be important that you have to look at that through the lens of what your strategy is, where you know how it's kind of historically performed, so you can get a better odds of what your success is going to look like. Maybe you're trading the Orbo breakout or breakdown. Maybe you're trading the retracement. Maybe a MACD crossover. Maybe the EMA crossover. Whatever it is, hey, you might even be trading just lucky at market open. Maybe you have a gut feel, and maybe if you just hit that twice in a row, you're going to be good. Because like I said, the odds was 25%. So if you're swinging hard out of the gate, that is theoretically possible. But on the other side, and I'm just randomly picking here, let's say you like to trade the EMA crossover and you're not going for the biggest swings. Maybe you're in that fourth example where you're only going for the $300, but you're trading that maybe even a couple times out of a day, or maybe just the first firing of the day. So my point is this, is you should know the odds for all of it, because like I said from the onset of this video, this test is more difficult than Apex, but it's obviously still possible. Many people have a lot of success on Take Profit Trader, and you could argue that it's worth it because as soon as you get funded, it is easier to get payouts. So whenever you're looking at these numbers and the breakdowns, of course you have to be consistent, but one of the best things you can do to improve your consistency is stick to whatever your trading strategy is and then apply to all these numbers that I gave you, and then just kind of hope that at the time you're running it, well, Lady Luck is on your side. And now I know there's probably some of you sitting there and it's a little bit awkward now because you're like,
this sounds great, but I don't really have a trading strategy. What are you talking about with an Orbo breakout? What are you talking about with an EMA crossover? What are you talking about of getting lucky at market open?
Well, there's a couple things you could do. First of all, the internet is your oyster. It is very easy to find a trading strategy. Just go talk to AI for a little bit. If you want to hang out on my live stream Monday to Friday, 9 to 11, I'm Degenerately Trading, so you can check that out. Or if you want to check them out on this channel already, I have multiple videos breaking down exact trading strategies that I think you might be really interested in. So in terms of where to go from here, I do appreciate all the good vibes and I don't want to feel like I'm giving you homework, but whatever your trading strategy is, apply it to one of these 4 situations that I gave you and look at just where the odds are optimal for you. That's exactly what I do, and that's why I have such a high pass rate on Take Profit Trader. As I said before, I'll make sure to link all the important stuff in the description of this video just to help you with any questions. But of course, if you can't find an answer there, I read all the comments on this video. So if there's anything on your mind, let me know in a comment below. And of course, if you have an idea for another video, if there's another part of sim to funded trading that you want me to break down, once again, let me know in a comment below. I appreciate your time. I hope you're crushing it. I'll catch you in the next one.